Welcome to the Gold Market Analysis for Wednesday, January 7th, 2026. We're providing a structured macro and technical daily analysis. The gold spot price is currently at $4,469.46 per ounce, showing a daily decline of 0.59% from yesterday's close. Please note, this content is analysis only and not financial advice. Today, we're seeing strong short-term headwinds for gold, driven by high-impact news events, particularly geopolitical developments and key economic data. The initial safe haven demand that boosted gold is now fading as geopolitical tensions ease slightly. The resumption of Chevron-linked oil exports signals market stabilization, creating short-term bearish pressure. A positive surprise in the ADP National Employment Report is strengthening the US dollar and Treasury yields, which typically adds pressure to non-yielding gold. While the overall risk sentiment remains, quote, risk off, the market is seeing gold liquidation rather than panic inflows. This suggests profit-taking after the recent highs. Now, let's look at the technical structure of the gold market and the key levels traders are watching. Despite today's red candle, the daily trend structure remains bullish, and price is currently testing the weekly volume-weighted average price, or VWAP. However, the break below yesterday's low confirms short-term bearish momentum, indicating a corrective phase in the 4-hour chart. Key support is found at $4,450, followed by $4,380. Major resistance sits at the prior high of $4,496, with the all-time high at $4,546. Looking closely at price action, we can see institutional behavior driving the current moves. Buyers are currently mounting an active defense in the critical $4,465 to $4,450 region, attempting to hold this key support zone. Elevated selling during the London session confirms institutional distribution, with the market, quote, selling the fact after the initial Venezuela headlines. So what's the overall market bias for gold moving forward? The overall bias for gold is short-term bearish, but the long-term bullish hedge narrative remains completely intact. Gold is undergoing a healthy technical correction as the Venezuelan risk premium fades. Price is vulnerable to a liquidity sweep toward the $4,450 zone ahead of key U.S. services data. Subscribe for more daily professional market reads.